Hello and welcome to another financial analysis video. Today we're taking a look at Travelers Companies, which reported earnings Tuesday morning, and they beat expectations handily by 70 cents a share, a very good quarter for Travelers. Now, a couple of things. I really like this company. I think from an operational standpoint, they're doing pretty well. On a returns basis, they have an improved return on equity. They're doing well on the ROA side, although it's not as improved as the ROE statistic. Now, earnings per share, a little volatile in 2013 with a lot going on, but lately it's just been kind of a slow-growing earnings company, and this despite the drop in revenue. This is something we're beginning to see consistently across the S&P 500. Now, free cash flow was dipping a couple quarters ago, and it has kind of stabilized. So the company, from an operational standpoint, again, pretty stable despite the revenue drop. Now, I want to point a few things out because I like Travelers at under 10 times trailing earnings, but what's interesting, and you don't see this too often, is that in front of the earnings, the relative strength index of Travelers was over 75 already, so it's probably going to see a little bit of a pop today, but with that high RSI, it actually makes me take a step back and think that this thing's either going to break downward or sideways for a period of time, and that may give me some pause to get involved immediately in the stock. Personally, for me, I'm not in a position to buy Travelers Companies. However, I would give it a buy rating as an analyst because of the low valuation, the consistent earnings performance. Going forward, there is a little bit of earnings growth over the next 12 months, and then it's expected to taper off in 2017. We'll see how those estimates change going down the road, but as I said, overall, good operating performance, good valuation. I'm a fan of Travelers Companies. I hope you enjoyed this video, and happy investing.